Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a great weekend. Just before we start the video, a number of you have been asking us, so yes, because we have such faith in our systematic data-driven process, we are launching a 2-week free trial for every single person watching this video and everybody who wants to check out the GMT membership absolutely risk-free. So if you'd like to join me on a daily basis where I go through scorecards for over 75 markets with members and do daily videos, as well as get access to tutorial videos in the tutorial section of the membership area, click on the link in the description below this video and in the pinned comment for more information. Okay, so let's have a quick look at the economic calendar, and it's this key piece of data from last week is the US inflation data. And on a month-on-month basis, which is the most important metric here, it actually came out hotter than expected and at a faster rate than it was in the previous month. And core CPI came out, it was expected to fall, it came out at the same rate as it was last month. This is not what the Federal Reserve wants to see. And when you take into account the Federal Reserve's dual mandate of unemployment and inflation, what we're seeing is, based on the previous non-farm payrolls data, we're seeing a strong labor market and we're seeing higher than expected inflation still, persistent inflation. What this means is the Fed are going to continue on their path of being extremely hawkish to control inflation. And they may even need to get a little bit more hawkish because it looks like more needs to be done to get inflation down. And historically, they actually need to get federal funds rate above core CPI, which they're not even close to doing yet. So don't be surprised to see that terminal rate actually go up from the Federal Reserve. If we jump ahead to this week, we do have some CPI data and also some GDP data out of China, some more CPI data out of the UK and out of Canada. However, there is nothing we really need to pay attention to in terms of major economic events taking place this week. This will all bring employment data, bring volatility into the markets, but it's nothing we need to plan our trades around for in the short term next week. If we look at the scores for the coming week, we can see the US dollar is still the number one currency in town in the scores, and the top markets that I'm going to be looking for this week are dollar long plays vis-a-vis the Australian dollar and the Japanese yen specifically. Why not the New Zealand dollar? Even though the New Zealand dollar is rated as the weakest, because as you can see, the New Zealand dollar came off of oversold for the first time. This usually indicates a near-term bottom. So I wouldn't be bullish on the New Zealand dollar. I do think we could still see further declines, but heading into next week, I think there are better currencies to short, and that is namely the Australian dollar and the Japanese yen. Those are my two favorite shorts going into next week. And aside from shorting those versus the US dollar, I am also going to be looking in today's video at Aussie franc to the downside, franc yen to the upside. I'm also going to be looking at Euro yen to the upside and Euro Aussie to the upside. And we can tentatively look at pound yen to the upside and also pound Aussie to the upside as well. Pound pairs are not highlighted as my favorite plays just because it only scores one. It does have a good net change, but it only scores one, which is kind of bullish to neutral. So we will look at them, but pound pairs are not highlighted this week as the top markets to be looking to trade. And there is also a little bit of ongoing risk with what's going on in the UK around the bond market if you are trading the pound pairs. And when we go and look at the yen pairs as well, just bear in mind the yen is getting so weak that you do potentially run the risk of BOJ intervention in the Japanese yen. They did it previously, and we're approaching levels in the yen where they could do it again. So I am interested in yen shorts next week. But if you're a little bit worried about yen intervention, you've got two options. You can take a wider stop to make sure if the BOJ does intervene, you only take a loss within the bounds of acceptability. So you're not basically getting smashed through a very, very tight stop on intervention. You know, you take a couple of weeks ATR or something and the BOJ intervenes and you lose, a week's ATR, it's a big deal. It's half of your overall risk. But if you're trading the Japanese yen with tight stops, you could actually find yourself on the wrong side of a BOJ intervention. So nothing to panic about, but you must risk manage yen pairs correctly. Take wider stops if there is the potential for increased volatility in the Japanese yen and you would like to trade it. If not, you can just stick to the Aussie pairs if you are in fact concerned about BOJ intervention next week. Because don't forget, for those of you new to trading, if the BOJ intervenes, it will do so in order to increase the value or the strength of the Japanese yen. Okay, so let's have a look at the individual currencies here before moving on to the markets themselves, starting with the dollar. And the dollar is the only currency, as I've been highlighting in previous weekly Forex forecast videos. It's the only currency in a full-blown bull market. And yes, we had a little bit of a dip down last week, but this is not a reversal. The market is just correcting a little bit, and the high probability move in the DXY in the near term is to come back to new highs and also up to the 114.90. So I am bullish on the dollar. Any kind of pullback in this area is simply viewed just as that, as an opportunity to get long once again into the highs and into the 114.90. Next is the euro. The euro is in a downtrend. It's below the 7-year breakout and it's below the 4-year breakout. And I am still bearish overall on the euro, but as you can see, it's kind of been correcting. And in last week's video, we looked at some euro long trades, and you can see they actually worked quite well, even though the euro is in a downtrend. Why? Because it's in a downtrend, but it's kind of corrective. And the macro scorecards, they're forwards looking, they picked up on that ahead of last week, and they told us, and they're telling us again, we can look at potentially long euro positions vis-a-vis the Aussie, for example, vis-a-vis the yen. So despite the fact this is in a downtrend, on a forwards looking basis, it does look like the euro is set to outperform some of these other currencies. So I wouldn't be outright bullish on the euro. I do favor those dollar long plays still, but I am interested in euro long plays this week vis-a-vis the Aussie and the yen especially. Next is the pound. Again, not an outright bullish currency. However, we are projected to see some relative strength, and certainly versus the yen and also the Aussie. We're going to be looking at those markets in today's video. I will be keeping an eye on those next week to see if there's any long opportunities in pound Aussie and pound yen. The recent volatility we've seen has been because of this ongoing situation between the government and the Bank of England. We saw the Bank of England stepping in to essentially save the pension funds, and this is what's caused all this whipsaw and volatility in the pound. However, it does look like the UK government has now reversed the policies that they were looking to enact, and this has put a little bit of support underneath the pound. But because of the ongoing volatility and because of the fact it's only bullish to neutral in the scorecards, these are not highlighted as the best opportunities next week. I do favor these other 6 markets next week, but I do think we could see some near-term relative strength in the pound. Next is the Swiss franc. Again, not really bullish, but kind of technically neutral. We are coming down. I wouldn't be surprised to see us come down, take out the lows, and we may even bounce here. And on a relative basis, if this currency market can hold this kind of range, which it's been in, I wouldn't be surprised to see the Swiss franc outperforming, and the scorecards are telling us to look ahead and be bullish on the Swiss franc relative to some of these other currencies. So we will be looking at franc yen and also Aussie franc. Next is the Japanese yen. We did take out the target set to the downside at the 0.00670, and midweek, when we do these scores with members, the scorecards absolutely nailed the yen. It got us on the long side of the yen just in time, and then it got us out of the yen longs just in time, and now it's actually projecting to look for yen short positions. So I do favor yen shorts to the downside. However, I did mention the fact that we could have Bank of Japan intervention, and when we go and look at the US dollar yen, you will see this. I mean, this was the last time. You see this candle here on the daily? Yes, it failed, and any continued intervention from the Bank of Japan is again likely to fail until you start to see some coordination, for example, with the US, whereby the Federal Reserve starts to weaken the dollar, and that's going to help any intervention efforts from the Bank of Japan. Well, we've just discussed the fact that the Federal Reserve are very, very unlikely to pivot or start to look to devalue the dollar index in any way. Why? Because this is going to exacerbate their inflation problem. So any help from the US in devaluing the US dollar to help the BOJ with its intervention and to increase the value of the yen is likely to fail, but you may get some short-term whipsaw, and that's why I say if you are shorting the yen, there's nothing wrong with shorting it, but you do want to be taking wider stops. So if the BOJ does intervene, even if it fails, you don't want to see the market blast through your very tight stop and you end up losing more money than you actually risked on your initial stop loss. Next is the CAD. The CAD is kind of grinding to the downside. We don't really have any outright signals on the CAD from the scorecard. So overall, I do favor CAD shorts. And if you are looking to trade the CAD pairs, I am looking for further declines. I wouldn't be long the CAD, but I think there are better markets this week to short, namely the Aussie and the yen pairs. Next is the Australian dollar. We took out the target to the downside at 0.62150. Now, we are approaching the 0.61240, but look at where we go when we break below this. The next stop for the Australian dollar is the 0.5511. And there is nothing but air between these levels because this was a fast market during the COVID crash. I do think we're coming back down to the COVID lows here. And in fact, in stock markets and other markets, I think there are a lot of markets which are heading back to their COVID lows. That might sound a little bit extreme as we currently sit, but I think you will find that a number of markets are actually, in fact, heading back to COVID lows in the near future. So I am interested in Aussie shorts, and if you can get involved in Aussie pairs somewhere at the beginning of the week, this could be a market you might want to look to hold for a number of weeks, because once we break the 0.61240, we could be coming down to the 0.5511 pretty quickly like we did last time. And finally, we have the New Zealand dollar. We are approaching the 0.54660, and this is not a bullish market. Just because it came off of oversold for the first time doesn't mean I'm looking to buy it. What it means is if you've been short the New Zealand dollar, and we've been short for a while here, you want to be looking at booking profits on your shorts near term until the New Zealand dollar starts to re-accelerate to the downside. Now, if I zoom out here for you, we are approaching the COVID low in the New Zealand dollar. And once we break this, maybe we get a near-term bounce, and that is what kind of holds the New Zealand up a little bit technically here. But once we break this, I do think we continue lower. And not only will this continue lower, but as I said previously, that Aussie currency is probably heading back to its COVID lows and possibly even lower still. So we're approaching some big levels here in the currency markets. Although I favor Aussie and yen shorts this week, don't sleep on New Zealand shorts because they're probably going to be coming back into the scorecards over the next week or so. Okay, so let's look at the markets themselves, starting with crude oil. Now, crude oil is a market I analyze every single week, and I don't have a strong bias on crude oil heading into this week. It is kind of neutral in the scorecards, and so I do think there are better markets to trade. However, on balance, I would be looking for further declines as the slightly higher probability play next week. Any pullback in crude oil, if you do want to trade this, is viewed, in my opinion, simply as an opportunity to look for bearish setups. And I'm going to be looking down towards the 79.99. So again, I reiterate, I am slightly bearish on crude oil, but I don't have a very, very strong bias on it. I am kind of neutral overall, and I think there are better markets to trade outside of crude oil next week. Next is euro dollar. Like crude oil, I put euro dollar into the weekly Forex Forecast video every single week by popular demand because it is a widely traded currency pair. However, note that last week, the forwards-looking macro scorecards were telling us to look at euro longs vis-a-vis, let's say, the Australian dollar, which worked out quite nicely last week. But it was warning us that euro dollar was likely to correct, to be choppy, and to range. Why? Because both the euro and the dollar were strong. And look at the lack of volatility last week. Now, you could have saved yourself a headache last week by simply trading the best scoring currency versus some of the weakest scoring currencies on a 1 month forward looking basis, and you had some explosive moves. So the scorecards are not just putting us in front of the best moves on a forward looking basis, but they're attempting to keep us out, and they do so very successfully most of the time, keeping us out of these choppy markets where they barely move. So heading into next week, on balance, I do favor further declines in this market. It is in a downtrend, and on a 1 month forward looking basis, the scorecards are actually telling us that the DXY is likely to outperform the euro, even though the euro is quite strong itself. So any pullback is still only viewed as an opportunity to look for further declines down towards the 0.9413. Like crude oil though, I do think there are better markets to trade next week. Okay, so the first of my top markets heading into next week, which I'm going to be keeping an eye on, looking for trading opportunities, is Aussie dollar. We took out the target and finished the week almost to the point at this target. Heading into next week, I know this chart looks a bit squashed, but it's because of the distance between this target and this target. I've had to zoom out a little bit. So I am looking for the 0.6124 next, and because we're quite close to it, I'd like to see a pullback like this first heading into the start of the week. If we can pull back, this is going to be the opportunity to start to look for bearish setups into the 0.6124. But as I said at the start of the video, I think this is coming down to its COVID lows. And we could be coming down quite quickly once we break the 0.6124, perhaps over the next few weeks, down to the 0.5507. So keep Aussie dollar on your radar because it does look like we have quite a lot of distance to go to the downside yet in Aussie dollar. Definitely a market to keep your eye on over the next month. Next is Aussie franc. Last week I highlighted this as a good opportunity to look for shorts. We did come very close to the target, but we haven't quite achieved it yet. So if you're not already short from last week, what I'd like to see first is any pullback. That would be your opportunity once again to start to look for bearish setups into the 0.6208. If we come down, take out this target first and then bounce, I'm going to be looking down towards the next target to the downside at the 0.6150. EurAusd highlighted as a top market to the upside last week, and we did come up and take out the target set at the 1.55150. Any pullback in this market this week is simply viewed as an opportunity to start to look for bullish setups, and I'm going to be looking up towards the 1.5839. And the final Aussie pair we're looking at here is Pound Aussie. I do favour Aussie dollar, Aussie franc and Euro Aussie over Pound Aussie because of reasons discussed earlier in the video. However, we do have a really nice breakout of this kind of ascending, it's not quite an ascending triangle because we only touch it once over here, but we do have a nice breakout of this consolidation. So any pullback, I am looking for this bull flag here, you can see, to continue higher. Any pullback is simply viewed as an opportunity to look for further advances into the 1.8508. Okay, so moving on to the yen pairs, and you can see over here, this was the intervention from the BOJ in US dollar yen, or not in US dollar yen, but in the Japanese yen, showing up here in US dollar yen. And this was at the 145 level over here, was seen as a bit of a ceiling. And this is where the BOJ intervened previously. This is now a bit of a runaway freight train, and I wouldn't be surprised to see the BOJ intervening, albeit, as I said, unsuccessfully once again. In fact, they may actually refrain from intervening purely because they know their interventions are likely to fail as long as the US is tightening and increasing the value of the dollar in the way that it is. So any pullback in US dollar yen is viewed as an opportunity to look for further advances to the upside. I am looking up to the 151.64. Just bear in mind, if you expect increased volatility in a market, you must increase also your risk tolerance. In other words, your stop loss. So if you are trading the yen pairs, I just reiterate, please make sure you're using wider stops because there is risk of this kind of whipsaw on BOJ intervention. Next is franc yen. You can see here is the BOJ intervention, and we kind of just moved sideways. And just like we saw in US dollar, we came up, took out the high of the intervention, and we've just continued. And it does look like Swiss franc is now making an attempt to do the same. So any pullback next week in franc yen is viewed as an opportunity to look further advances into the 151.83. Next is euro yen. We are now starting to break out of the previous high of the BOJ intervention, and again it does look like we're coming up to previous highs over here and onto the 132.77. So any pullback, and we have a little bit of momentum, you see here, bit of momentum in euro yen, any pullback should be treated as a potential bull flag, looking further advances into the 132.77, and if we break through here onto the 147.97. So those are my 6 top forex pairs that I'm interested in trading next week. And if you are concerned about the risk of BOJ intervention, there's nothing wrong with just sticking to the Aussie pairs and perhaps some of the commodities down here like gold and silver, which we're going to look at next. Okay, so wrapping up the forex pairs with pound yen, we have started to break out of this consolidation down here, and you can see we're breaking with momentum now. So any pullback in pound yen is treated as a potential opportunity to look further advances into the 153.40, and if we break through here, could very well be looking up to the 174.86 in the near future. Okay, so wrapping up the video with gold, silver and Bitcoin. We're not covering the S&P 500 in this week's video because I have outlined my view on the S&P 500 in the last few weekly Forex forecasts. So if you are interested, go and have a look at the previous videos because I do cover S&P 500 at the end of the videos in the previous weekly Forex forecasts. And my outlook on the S&P 500 hasn't changed. In terms of the gold-silver ratio, I do think we're probably going to see the formation of a right shoulder here, and I would not be surprised to see gold start to outperform heading up to the 96.94 in the gold-silver ratio. So I do favor shorts in gold, silver and Bitcoin, but out of the three of them, Bitcoin shorts are my top play because I do think we're likely going to see a bit of a waterfall sell-off in Bitcoin in the near future. Okay, so starting with gold, and previously we rallied above the major breakout level of the 1676.86. If I scroll out, you can see that is the major low over in this area. And what we've done is we've basically retraced this in a bigger time frame, and we've started to reject from this level. So I did warn in previous videos that the rally in gold and silver you should be wary of them, because we did have a stronger dollar. We still have some of the macro backdrop. We like real rates, for example, is still increasing, which is a headwind for both gold and silver. And any buying of gold and silver would have been a mistake because we're starting to roll over. So any pullback in gold on balance is treated as an opportunity to start to look for bearish setups, and I'm going to be looking down towards the next key over support at the 1575.72. Next is silver. Again, with real rates rising, gold and silver, any bounce to the upside is definitely something to be treated with caution, and we have started to roll over. I did think last week we might come back and retest the 21.4230, but the commodity scorecards told us to stay out of those longs, and we fell over 6% since then. So any pullback in this market on balance is viewed as an opportunity to look for bearish setups, and I'm going to be looking down towards the 16.96. Last but not least, we have Bitcoin. Now I've zoomed out on Bitcoin to the daily chart because this has lacked such a large amount of volatility that it's easy to forget how explosive Bitcoin can be. Look how tight this range is. And I noted in last week's video we failed this kind of ascending triangle, which is not surprising. You don't buy ascending triangles in a bear market, which is what Bitcoin is in. So that failure was an indication we're likely headed lower. And we had a bit of a whipsaw. We did have volatility coming in off the CPI, but nothing has really changed in Bitcoin since I previously pointed this out. And I do think we could be in for another one of these in the very near future. So going into next week, I do favor shorts in Bitcoin. I am looking for potentially the next waterfall sell-off in Bitcoin. Any pullback, therefore, is just treated as an opportunity to look for shorts into the 16.492, as we have been looking at previously. And this large consolidation does at some point have to come to an end. So that is it for me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. If you enjoyed today's video, why not consider joining us during the week, where I share my charts as well as the setups that I'm personally looking at trading with members on a daily basis. And we also publish the scorecards for over 75 markets in different asset classes, including Forex, stocks, bonds, and commodities. You can find out more about the benefits of GMT membership by clicking the links in the description below and also in the pinned comment below. So thanks for watching. The only thing left to say is take care, and don't forget to trade safely.